So when I started Betfair Trading, I didn't have any guides, books, videos, nothing to basically get me started. But I used a certain method and way of trading that got me to much higher levels. And typically when you look at getting started on Betfair Trading of any sort, people tend to sort of misfocus in terms of what they're trying to achieve and what they want to do and how they're going to achieve it. But the fact is, if you start from the same base as me, there's no reason why you couldn't achieve the same things as me. And there are important lessons in there in terms of how you can get profitable, how you should be trading, what you should be focusing on, and how you should do it. And that's exactly what we're going to discuss in this video. So when you first start trading, what is your objective? Well, typically most people would define the objective as making money. But I argue that you should not be focusing on that because it will lead you down the wrong path. So what you should actually be doing is understanding what your true objective is. And fundamentally speaking, your true objective is defined by what happens within the market. If you go into a market, you have a sensible strategy and you have good money management, what will happen is you will break even. And in fact, you'll actually not quite break even because you have to pay commission on your winning trade. So in fact, the total return that you will get is break even minus the commission you paid on your winning trades. But your objective really to get profitable is just to overcome that commission on winning, because if you trade at random, you'll get random results, which will mean break even minus a little bit of commission. So fundamentally speaking, when you're actively trading, that is your objective, not finding a winning strategy or a winning trade. Your objective is, if you trade with your particular strategy, do you overcome that hurdle? The hurdle is very thin on a betting exchange, and your primary objective is to overcome that hurdle. So how would you go about doing that? When I first started trading, one of the things that was apparent to me was that that hurdle existed and I needed to overcome it somehow, so I set about trying to find ways that I could achieve that. And the way that I did that is I would go into a market, I would place 2 trades in the market and just generally see what would happen, because that would give me a strike rate, and then I could actually define how I would begin to overcome that. But whatever market I was in, I would go through the same process. So I'd sort of say, I wonder what happens if I lay the draw at 60 minutes in a match where the home team is 1-0 up. Or in a tennis match, I would say, well, if I lay the favourite and then exit when they are a breakdown, what happens there? Because what you actually find is each market has a slightly different payoff. But like I've said before, fundamentally speaking, you have to believe that the markets are efficient. So what you have to do, therefore, is you have to try and think through ways that you can actually turn that strategy profitable. Because if you just apply one strategy across a whole range of markets, you're going to get a whole variety of different results. So for example, if we scalp a very competitive handicap, we're going to get much better results than if we tried to scalp in a race with a short-priced favourite in a maiden with unraced horses, because nobody knows what the price of that horse should be. So the price is going to move around all over the place. But in a competitive handicap with high-grade horses, people will have a good idea of roughly what the price will be, and therefore that will be a market that will be much more suitable than this one. So if you apply a general strategy across all of the markets, you're going to still be back at break-even because you haven't varied or applied that particular strategy particularly well, and you're probably not very well practiced at it as well. So one of the early things that you learn is strategies work well in some markets and not in others. The worst thing that you can do is apply one strategy across a whole range of markets, because you'll find you'll get very varied results. But even if you do that, you should be able to pick out strategies and tactics that don't suit exactly what you're trying to do. And not participating in those markets with that strategy is one of the first steps that you can take for moving from break-even into profitability. So as I've just mentioned, for every market there's a strategy, and every strategy a market. Your objective as a trader is to join them up. Don't apply it across every single market, because you'll just end up back at square one. But the idea is that if you focus in on one particular strategy, then that will lead you to focus on certain markets, and then you need to practice. I know it's boring, but fundamentally speaking, this is one of the most important things that you can do, is, even if you identify stuff after it has happened, at least you're identifying it, and your objective over time is to get better and better at doing that. Eventually you'll begin to, rather than seeing it after it's happened, you'll be able to see it as it's happening. And then when you get to that stage, your next objective is to begin to see it before it happens, to be just on the front edge of that. Because fundamentally speaking, and one of the most important things that you can learn about trading is that it's about taking risk. It's not about being profitable on every trade. It's about saying, well, this looks suitable. I think I know what's going to happen in this market. Let's go. Every now and again, you'll get something that works perfectly exactly the way that you expect. But if, quite often, the market won't do what you expect and it doesn't quite happen, or something unusual happens that deflects that trade away from being a good trade. And you have to accept that that is just part of the mix. You're not going to get it right every time. This is where trading becomes ambiguous and people struggle with it. But you've got to understand that trading is a balance of profits and losses. And therefore, when you find a suitable setup, you're probably going to say it's only going to work 60–70% of the time. But fundamentally, when it does work, the amount of money that you make offsets all of those little times when it doesn't work. And then you just get better and better at doing it. So don't be disappointed if you're off to a difficult start. It's all about basically shifting your focus from watching when something has happened to basically watching when it's likely to happen. And if you watch a lot of the videos that I do, that's what I'm trying to teach you. I'm saying to you, here's a setup that I like, something that occurs regularly, off you go. It doesn't mean that it's definitely going to happen. It's just one of the many things that I tend to look for. Another important thing you can do is set realistic objectives. This is something that I've tried to tell people to do over a long period of time. People are obsessed. I was looking for the right word, and I think obsessed is the right one, with basically getting results very, very quickly. They just want to get something that works, and they want to start, doubling their stakes and suddenly ordering that Sunseeker yacht, all of those sort of things. That is absolutely not the way that you should do it. What's easier to do? If you have a bank of £100, do you think you could actually double that in one trade? Do you think you could get £100 from a £100 stake? Or do you think you could get a £1 profit from a £100 stake? Now obviously the latter is much more achievable. Could you possibly get 1% return on your £100 trading bank stroke stake? Yes, of course, that's much more achievable than doubling it in the same amount of time. And it also puts much less pressure on you as a trader. So even if you start with small stake, it's going to be painful to start with because you're only going to be making or losing pounds here and there. But basically at the end of the week, you can look at your bank, you can just up it a little bit more, and maybe you go for £1.50 the following week on average. And then gradually that will increment over a period of time. This is in combination with all of the other things that you must do, but basically spreading out your objective over a very large range of markets is much more achievable and easier to get to over a period of time than just chasing down those big totals when you first start. So when you're actively trading, or doing any betting in fact, very often winning isn't winning. And I know that sounds strange, but it's true. If you have a very high percentage win rate, it doesn't mean that you're going to be profitable over the long term. So it's really important that you get your trading expectancy correct. You need to know how often you win, how much you win when you win, how often you lose, and how much you lose when you lose, because that is how you can influence the outcome of your trading over a long period of time. You're looking to basically adjust some of those parameters to get yourself profitable, to get yourself over that break-even line. If you look at my expectancy, what you'll notice is it really should be a bell curve. If the market was sort of random and my trading was random, then I would lose as many times as I won. But you can clearly see from the graph that that is absolutely 100% not the case. I always win more than I lose. But half of the thing that I'm doing there is basically making sure that my losses aren't too big. I'm getting myself into the market at roughly the right time. I'm using good money management, and I'm limiting my ability to take losses. But when the profits come, I'm maximizing the opportunity to profit there as well. So yeah, get that little bit of trading right and you'll be well on your way to turning profitable. So one of the things that people often get wrong with trading is that when we go in and do a trade, it's very, very different from traditional betting. And that is because when you're betting, you're basically saying, the way that you're going to win money in the long term is by winning more frequently than you lose, and there's the balance between those two things. But when you're trading, there are a number of ways to influence and get a positive outcome from the trading. If we go into a market, we're very likely to use a stake that is very similar to the one that we'd use if we were betting. But fundamentally speaking, we're only going to be risking a small amount of that in terms of the movement that the trade goes in or out of our favor. But the other thing to bear in mind about trading is that we can actually repeat that process again. So if we go into a trade with a fixed stake of 100, for example, and we earn a 10% return on that, the next time that we do our trade, we're not actually risking £100 within the market. We're actually only risking 90 because we've already got £10 of profit built in to that particular trade. So if we repeat that trade again, then you can see that we're beginning to lower our risk and our probability of loss within a market. And that, fundamentally speaking, is going to either reduce your liability or the potential for loss, or increase the gain that you get within that market. And that's what a lot of people get completely wrong when they're actively trading. So we've discussed many different things there, but where should you start? Well, the best thing to do is, if you know, there are certain sports and certain strategies suit certain types of people, and not everything is going to suit everybody. So it's important that you understand what your level of risk is, what you like and you don't like, and what you find frustrating and what you find interesting, because that will help you engage with the market a little bit better. But fundamentally speaking, what you should do is you should pick a strategy, and then you should work hard at getting better at it. And if you just skip from one strategy to another looking for the thing that's definitely going to work, you're wasting your time, because you need to look at one strategy, work on refining it as much as possible, understanding it as best as you can. And like I said, you're going to be slightly behind the curve to start with, but over time you'll be able to progress to be in front of the curve. And when you've mastered that strategy, then you can start looking at other strategies. Over a long number of years, I've developed and refined the process behind a whole range of strategies, so I can turn up to market and I know pretty much what I want to do. But when you start out, you will not be able to do that, because you'll be a jack of all trades and master of none whatsoever. So it's really important that you start looking at strategies, you start practicing those strategies, and when you feel confident that you've mastered them or you understand them a bit better, that's the time that you move on to a new one. You don't go endlessly searching for something that's just going to work, because you will never find that. You'll probably find that they're all break-even because you're not pursuing them in the right markets, doing roughly the right thing, and you're a little bit behind the curve. And the problem is that, you know, you can sort of get shortcuts. When I produce videos, I'm saying to you, this is what I'm looking at and this is why I'm looking at it, or here's a strategy that works and here's why it works. But what I'm not saying is basically, you know, just go out and apply that blankly. I'm just sort of saying, here's an idea for you, here's something where you can look for a little bit of an edge, here's something that you can do, something that isn't random, basically. And from there, it's up to you to be able to put it to use or to spot those opportunities. But yeah, I started from a very, very low base and gradually built and layered strategies on top of that, got better at doing all of the stuff that I do, and that's really the only thing that separates what I do from what you do, just a bit of experience and doing roughly the right things. So if you're looking to start on Betfair Trading, that's fundamentally what I think you should be doing.